Yeah. Welcome students, and good evening to all of you. How are you guys? So, day before yesterday, students, we had touched upon the topic of standards on auditing, essays. So, today we will go into the brief background of essays, and we will learn a little more things, few things about essays and other standards. Okay, so guys, you have to understand that there is a body, international body, which is called as IFAC, International Federation of Accountants. Okay, so this body has set up a board, that is International Auditing and Assurance Standards Board. So ICAI is also member of International Federation of Accountants, and International Auditing and Assurance Standard Board issues standards on auditing. Similarly, ICAI has also set up Auditing and Assurance Standards Boards, which issues standards on auditing in India. IAASP issues standards on international scale. Okay, we will see how these things operate. So I have told you there is a body, that is International Federation of Accountants. Okay, so ICAI is member of this body. Under the auspices of IFAC, there is a body, IAASB, which is known as International Auditing and Assurance Standards Board. Okay, so what is the objective of this body, IASB? It tries to bring harmony in auditing practices, worldwide. Okay, is that clear? So similarly, ICAI has also constituted Auditing and Assurance Standards Board, AASB, Auditing and Assurance Standards Board. So this board issues standards on auditing in India. Okay, is that clear? Is that clear, guys? IFAC is international body. Under its auspices, there is body IAASB, which issues standards on auditing worldwide, and it tries to bring harmony in the auditing practices worldwide. It ensures uniformity, and it issues standards also. And since ICAI is member of IFAC, so ICAI has constituted its own Auditing and Assurance Standards Board for which are applicable in India. Okay, so Auditing and Assurance Standards Board issues essays, standards on auditing, and other standards. So this is the This is the overall view, brief thing. Okay. So is that clear? Is that clear to you, students? So now we will see what are the different type of standards which are issued by AASB, that is Auditing and Assurance Standards Board. So guys, there are 4 types of standards which are issued by Auditing and Assurance Standards Board in India. Number 1, there are standards on auditing. There are standards on review engagements. There are standards on assurance engagements, and there are standards on related services. Okay, so before we go into where do these standards apply, we will discuss about the applicability of these standards. So first we come to standards on auditing. Okay. Standards on auditing, which you will study in the whole syllabus of the auditing. So there are many standards on auditing issued by AASB. So these standards on auditing deal with how audit is to be conducted. How audit is to be conducted. And what type of things are to be followed by practicing chartered accountants while conducting independent audit of financial statements. So we had learned yesterday that an auditor of financial statements does not seek absolute assurance. He only seeks reasonable assurance. So these standards on auditing help the auditor in conduct of audit, and there are standards issued on various aspects of audit. Like there is SA 200, which deals with overall objectives of auditor, overall objectives of independent audit. There is SA 300, how to plan an audit. It relates to planning audit of financial statements. Similarly, there is SA 315, which pertains to risk assessment, how identifying and assessing risk by understanding entities control system. So it pertains to this area, SA 315. Similarly, there are essays on many aspects, like there is SA 500, which relates to audit evidence. There is SA 220, which relates to quality control for audits, of financial statements. Okay. So similarly, there is SA 700, which relates to how the auditor gives an opinion. So all these standard students, these you will be learning what are the contents of these standards as we move from one chapter to another chapter, as we hop from first, second to third, and so on. All standards we would be covering during study of this subject. Okay, so is that clear? What is the meaning of standards and auditing? And students, one more thing you have to remember is that when an auditor conducts audit of financial statement, he is engaged by the client. He is engaged by the client to conduct an audit. So all these the standards, these are known as engagement standards, because when a client engages a chartered accountant to provide services of auditing and other services, so these standards are known as engagement standards. These are known as engagement standards. So we have learnt about essays, standards on auditing. Now this is first category of standards. So your focus during study of auditing would be on essays. Mainly you would be concerned with essays, but you have to know what are other three kind of standards. You need not go into detail into these standards, but you should know what are these standards and to what kind of engagements these standards apply. So another type of standard is standards on review engagements. What are these standards? Standards on review engagements. Which are known as SREs. SREs, standards on review engagements. Okay, so you would say, what is the meaning of review? We had just understood the meaning of audit, then what is the meaning of review? I will come to later on. First, we will see what are the remaining standards. So third type of standards are standards on assurance engagements, which are known as SAEs. And the fourth is standards on related services. Standards on related services, which are known as SREs. So essays, I have already told you this thing we would be studying in detail during the whole course. During every chapter, essays would come. However, as far as these three things are concerned, we would be just learning what is the meaning of review and to where these review standards apply, and where in what conditions standards on assurance engagements apply, and in what conditions standards on related services apply. Okay, so now what is the meaning of review? So while understanding the nature of auditing, the definition of auditing, we had understood, students, that auditing is a reasonable assurance engagement. Auditing is a reasonable assurance engagement that auditor obtains only reasonable assurance. Then what is review? So you can understand that review is a tad lower than auditing. All the procedures which are applied by auditor during audit engagement, these are not applied in review engagement. Only few procedures like inquiry and some analytical procedures are applied. Okay, so review of some financial statements provides a lower level of assurance. It provides a lower level of assurance as compared to what is provided by audit. So an audit engagement, when an auditor provides auditing services, he provides reasonable assurance. He seeks reasonable assurance. Guys, you have also to understand that reasonable assurance, although we say it is a reasonable assurance, it is also a high level of assurance. Although it is not absolute assurance, it is a high level of assurance. Okay, is that clear? But in review, the auditor does not perform all the procedures. He performs only few procedures like inquiry and analytical procedures. He does not apply all the procedures, detailed procedures which he applies in an auditing engagement. Okay, and you have also to understand that review might be carried out by a chartered accountant, by a person who is not auditor of the company. Okay, and it can also be carried out by the auditor of the company to review, say, some interim financial information. So you understand what is the difference between auditing and review? Guys, please let me know, do you understand now what is the difference between auditing and review? Again, at the sake of repetition, I would say that auditing is a reasonable assurance engagement. Auditing is a reasonable assurance engagement. Whereas review is a, what is review? Review is a limited assurance engagement. Review is a limited assurance engagement. It gives assurance at a lower level, which is tad lower than the audit. Okay, you have to understand this much. What is the difference between audit and review? Okay, it is not a full-fledged audit. It only reviews. Okay, the practitioner, the practicing chartered accountant, no doubt gives the report, but he does not state that he has audited. He only states that he has reviewed the accounts. He has reviewed the financial statements. Is that clear to you guys? So there is another one more thing. Now you have one more distinction is there. You have also to understand that audit and review, these both terms apply to engagements where financial statements have been prepared on basis of historical financial information. You understand what is historical financial information? You have understood it in accounts. Historical financial information means financial information pertaining to transactions which have occurred in the past. So these audit and review both apply to engagements of historical financial information. It should be clear to you. The difference between audit and review is that this provides reasonable assurance and review provides limited assurance. Okay, guys. Now Isha is asking what is interim financial information. Isha, you can understand that interim financial information generally relates to a period which is less than financial year. Say the auditor might be asked to review accounts for half year. Okay, So this is called as interim financial information. Interim means which is not final. Interim. Okay. Interim financial information. Is that clear to you, Isha? So now we come to another thing, third type of standards which we had discussed. These standards are standards on assurance engagements. Standards on assurance engagements. These are known as SAEs, standards on assurance engagements. So guys, you have also to understand that auditing is also an assurance engagement. Review is also an assurance engagement. The difference is between degree of two. Audit gives reasonable assurance, review gives a limited assurance. And but both of these, audit and review, apply to financial statements which are prepared on basis of historical financial information. However, there is a third category, standard on assurance engagement, where the practicing chartered accountant, he has to issue a report, he has to certify some statements on prospective financial information. On prospective financial information. So what is prospective financial information? Prospective financial information, students, you would understand, it relates to some future events. It relates to some future events, that in future so much sales would happen, so much cash flows would be there, so much profit would be there. So how auditor is going to issue a report on that? So the only manner he can issue a report on figures which are on future events, he can only check the assumptions, that what the assumptions have been taken by the company in preparing these forecasts, and whether these assumptions are reasonable and whether these have been consistently applied. Okay. So the distinctive point between standard on assurance engagements and standards on auditing and standards on review engagement is that standards on assurance engagement apply to prospective financial statements, the statements which have been prepared on the basis of prospective financial information. Okay, is that clear? Is that clear to you guys? So another fourth category of standards is standards on related services. Standards on related services. These are known as SREs. Here guys, here you have to remember that the practicing chartered accountant, he does not provide any assurance. He does not provide any assurance. He reports the fact as these are. Suppose a chartered accountant may be asked to do some agreed upon procedures regarding some element of financial statements. Like he might be asked to check say creditors, okay, the accuracy of creditors, or he may be asked to check to obtain confirmations from creditors. Then he issues only a report in this respect only. In this respect only, he does not give any assurance. He just gives his findings that I have found this figure is correct, this balance is tallied or not, but he does not give any opinion. That is why he does not provide any assurance. Okay. Similarly, another example of standard on related services, compilation engagements. Now, what is compilation engagement? Compilation engagement, students, we had learned that uh, who, that financial statements are prepared by the management. The primary responsibility of preparation of financial statements is of management. However, sometimes it may so happen that uh, management may ask the chartered accountant, practicing chartered accountant, to assist them in preparation of financial statements. So here the practitioner only assists the management. So such kind of engagements are called compilation engagements. These also fall under the related services category. These also fall under the related services category. So we, as far as your syllabus is concerned, we would be mainly concerned with standards on auditing. We would be mainly concerned with essays. But you have to know what are standards on review engagements and what is the difference between standards on review engagements and standards on auditing. You have also to know that what are standards on assurance engagement and how do these differ from standards on auditing and standards on review engagement. Similarly, you have also to know what is the meaning of related services and to what kind of related services standards on related services apply. Okay, is that clear? Is that clear to you, students? Please drop your mails. Is that clear? So now we will see what is there in your module. Yes. So what we had read is essays. Essays apply in the audit of historical financial information. Here the word is audit. Clear? So these we would be studying in detail, various essays, as I have told you. Second thing is SREs, standards on review engagement. These apply in the review of historical financial information. This is also historical financial information. This is also historical financial information. Difference is in these two terms. Audit, here it is audit, here it is review. We have already understood the difference between audit and review. Okay. Third is standards on assurance engagement. Standards on assurance engagement means apply in assurance engagement, but which deals with matters other than historical financial information. It means which deal with prospective financial information other than, which are not concerned with historical financial information, which are concerned with prospective information. Is that clear to you, students? And fourth is standards on related services, which apply to engagements concerning agreed upon procedures and other related service engagement. Agreed upon procedures, I have already told you, like for say verification of some element of financial statements, like verification of accounts payable or accounts receivable, and it may relate to compilation engagements where the practitioner has to assist the management in compiling the financial statements. Just he has to compile the financial statements. He has not to express an opinion. Okay, guys. So you have also to understand, students, that all these four, essays plus SRE plus SAE plus standards on related services, these are all collectively called as what? Engagement standards. These are called as engagement standards because in all the four cases the client engages the practitioner. The client engages the chartered accountant. Okay, so these are known as engagement standards collectively. Engagement standards collectively. First three are assurance engagements, and third is related service engagement. Okay. So Ayush is asking how many essays are there. Ayush, I think total essays and SREs, I do not remember exact number. It should be around 40, 50. Okay, and now we will see, it is to be understood that standards on auditing apply in audit of historical financial information. This is the distinctive point. Guys, when you read something, you have to remember the distinctive point, because unless you remember the distinctive points, you would not be able to write in the exam. So basic thing, what do essays mean? Essays apply to audit. Okay, audit of what? Audit of historical financial information. And what are SREs? These also apply to historical financial information, but these apply to review of historical financial information. And what is the historical financial information? You already know, of events which have related in past, like a firm has purchased machinery, so the event has been has occurred. It has occurred in the past, and on that basis, entries have been made in books of accounts. So when the auditor audits the financial statements, he is verifying historical financial information relating to events that has occurred in the past. Okay. And what is the difference between audit and review? Again, we will study from your module that audit and review are two different terms. Audit is a reasonable assurance engagement. Audit is a reasonable. We had assurance engagement. We had studied day before yesterday that auditor tries to seek reasonable assurance. Okay, and his objective is to reduce the engagement risk, to reduce the audit risk to acceptably low level by employing sufficient audit procedures. However, review is a limited assurance engagement, and reduction is in engagement risk is to the extent possible as the circumstances may warrant. Okay, because here in review engagement, the auditor does not apply all the required audit procedures. Full audit procedures are applied only in audit engagement. In case of review engagement, only selected procedures are applied. Is that clear? And here it states that there are so number of standards. This we have already discussed. SA 230, audit documentation, 315, all these standards and many more. These you will be studying during the syllabus as we progress from one chapter to another. All the chapters are somehow linked to essays. Okay, so in every chapter you would find references to essays, and broadly every chapter is linked with one essay or few essays which are relevant to topics covered in those chapters. Okay. So standards on review engagement, two examples are there, like review of interim financial information, engagements to review historical financial information. Okay, so and there is another type of standards, SAEs, standards on assurance engagements, which apply to prospective financial information, which apply to prospective financial information which is rooted in future, relating to events related to future. So how the auditor is going to verify that? He can only verify the assumptions, whether these assumptions are reasonable, whether the projections or regarding sales are reasonable on the basis of assumptions, whether the figures of net profit, which is projected net profit, it is reasonable, whether the whether these assumptions have been applied consistently, whether these have been accurately prepared and presented, all these things. So the distinction between standards on assurance engagements and standards on auditing and review engagements is that first two relate to historical financial information, whereas standards on assurance engagements relate to prospective financial information. Clear? Clear? So I am again explaining prospective financial information. Pooja, you are asking. So this is here, it is the difference between historical financial information and prospective. So what is the difference? Difference is the former relates to information expressed in financial terms about economic events occurring in past periods. Say when some sale has been made in the month of February, the auditor audits the accounts after financial statements have been prepared, then the information is rooted in past. The sales have occurred or some expenses have been incurred. This is all historical financial information. An asset has been purchased. So the event has occurred in the past. The company has taken a loan. The loan was taken during the year. So the event has gone by. So it is known as historical financial information. And what is the prospective financial information? Prospective means which would occur in future, which is going to occur, which is prospective in nature, which has still not occurred. So how somebody can check some financial information which has still not occurred, because there is no documentary evidence to it. So in such a case, the only recourse available to the practitioner would be to check the assumptions, whether these assumptions are reasonable on the basis of which projections have been made. Say certain projections have been made regarding sales, or certain projections have been made regarding net profit or cash flows. So all these are prospective financial information. The practitioner can check only assumptions behind these, behind making these prospective financial information, and whether these have been correctly presented and these have been prepared accurately or not. Okay. So is it clear to you guys the difference between historical financial information and prospective financial information? Now Ayush is asking, where does prospective financial information come into the picture when we are studying financial statements based on historical financial information? Ayush, you are correct. These standards on prospective financial standards on assurance engagements which apply to prospective financial information, these do not apply to financial statements which have been prepared on the basis of historical financial information. These only apply to certain statements or certain financial statements which are prospective in nature, which have been projected. These do not apply to financial statements which have been prepared on historical financial information, because sometimes it so happens that even in case of certain projected financial statements which relate to prospective financial information, the practitioner has to give his report on these also, that whether these are reasonable or not. Okay, that is why standards have been issued on statements which have been prepared for prospective financial information, and these standards are known as standards on assurance engagements. Okay, is that clear to you, Ayush? And now, so all these four things, guys, you have to remember uh, their meaning. S's we have already discussed. We will be discussing during the coming lectures also. But as far as balance 3 are concerned, you have to understand what these are and how these differ from standards on auditing. This much only. That is only part of your syllabus. Okay, but you have to know the clear distinction between all these four things. Now, Dhanlakshmi is asking, what is compilation? Compilation, Dhanlakshmi, means just compile the financial statements on the basis of figures provided. Say the company is not able to compile financial statements due to some reason. So the company comes to the practitioner with trial balance and source data, and he asks the practitioner to help them in compiling the financial statements. Now here the practitioner only compiles; he does not verifies anything, or he does not apply audit procedures. He only compiles the information from raw data, and he may issue a compilation report that I have compiled the information from the records produced before me. Okay, is it clear to you, Dhanlakshmi? Now, Isha is asking, in standards on assurance engagement, auditing is done only in respect to financial statements which are estimated. Isha, do not use the word audit when we say standards on assurance engagement. Standards on audit is when we say audit always relates to historical financial information. You do not say audit, you say only verification of prospective financial statements relating to prospective financial information. So try to use correct word. Audit only relates to historical financial information, event which has occurred in past. Okay, clear? So lastly, there are standards on related services. Now, these standards apply in engagements to perform agreed upon procedures. Like I told you, agreed upon procedures, like to perform certain procedures, not the whole financial statements, not verification of all elements of financial statements, but it applies to only certain agreed upon procedures. There is agreement between the client and the practitioner to check only one part of financial statements. Okay, here also he just report the facts. Okay, like debtors accounts, accounts payable, creditors, or accounts receivable, purchases from related parties. There might be some related parties, and there the practitioner is asked to check purchases only from related parties. Okay, and compilation engagements. And compilation engagements. And here, all the above standards, these are all collectively known as engagement standards. You have to remember, all these are collectively known as engagement, because in all the four cases, 1, 2, 3, 4, audit, the client engages the practitioner. Review, client engages the practitioner. Similarly, in case of assurance engagements and related services, so the contract of engagement is element of engagement is always there in 4 type of engagements. That is why these are known as engagement standards. Is that clear? These are collectively called as engagement standards. And also there is one more standard which is known as SQC1. It is standard on quality control. Now you have to remember that this standard applies to all services covered by engagement standards, to all the services, to the auditing services, to the review services, to assurance engagement services, and to the related services. What is SQC1? SQC1 relates to basically quality control of all these services, that all these services have to be provided by the chartered accountant, by the practitioner to his clients, maintaining quality. So he should ensure that he has got quality people with him who can handle the engagement. He has to ensure that he does his work with professional skill and care, and all audit documentation is maintained. Okay, so SQC1 standard on quality control applies to all 4 kinds of services that we have discussed above. Is that clear? Yes, Dhanlakshmi, in standards on review engagement is different from standards on related services, because even in standard on review engagements, the practitioner gives his report, he gives assurance, although this assurance is of lower level as compared to audit. But in case of standards on related services, although the practitioner gives the report, but he does not give any assurance, he does not provide any comfort, he just puts the facts straight as these are. Okay, so that is the difference between standards on review engagements and standards on related services. So I think I have tried to clear all your doubts, guys. So again, asking, who is asking? Shri Nagalakshmi is again asking, sir, explain compilation engagement. Compilation engagement, Nagalakshmi, you have to understand that although primary responsibility of preparation of financial statements is that of management, the management is responsible for preparation of financial statements. However, in some cases, it might so happen that management needs assistance in preparation of financial statements. It is not able to prepare the financial statements. So they come to the practitioner with raw data, and they ask him, they engage him to just compile the balance sheet. Okay, that this is the data, these are the bills, this is the trial balance, but we do not have the expertise to prepare the financial statement. So you just compile it in the proper format and present it. Here the practitioner does not give any assurance, he does not provide any comfort. He says that I have just compiled the financial statements on the basis of information and records provided to me. Okay, is that clear now? Is that clear now? Okay, so this is an overview. Standards on quality control. We have, this applies to all all engagement standards. Okay, standards on review engagements, assurance and related services, and standards on auditing तो है ही ठीक है. And what, and another very important thing, this is very important thing, what is this thing, that while discharging their test functions, a test means, what does a test mean? A test means when the practicing CA, practicing auditor, he signs the financial statements. So in auditing language, we say he performs a test function. Okay. So it is the duty of members to see that the standards are followed in audit of financial information covered by their audit reports. If for any reason, so all the auditors have to comply with standards on auditing. If for any reason he has not been able to comply with standards on auditing, then he has to mention in his report that what is the material departure therefrom. Okay, so what is the material departure therefrom? It is very important. So guys, you have to understand that essays have to be followed by the auditor in conducting an audit of independent financial statements. And whenever they have not been able to follow essays for any reason, then they have to state that this has not been followed and what is the departure, from what way this differs from standards on auditing, or otherwise he has to say that we have conducted the audit in accordance with essays. Okay, is that clear? Yeah, Hiral Parik, he is asking what is the meaning of compilation of Performa financial information. Say, Hiral, this relates to some information, financial information which is included in the prospectus of a company. When company issues prospectus, then some financial information which is Performa, which is not final, it has to be certified by the chartered accountant. So it relates to that. Now there are two other terms, guys. There are two another terms. So we will discuss these terms. These terms are statements and guidance notes. It is here, statements and guidance notes. Now Hiral is again asking what is the meaning of material departure. Material, Hiral, means significant, important departure. What is the deviation? That the standards required auditor to do this thing, to deploy this procedure or to verify this item in such a way, but the auditor has not been able to carry out such audit procedures. Material means significant, which is important. Okay, and which has some possible repercussion. Okay, is that clear to you, Hiral Parik? So there are two more terms, students. One is guidance note. Okay, and another is statements. Now you have to just understand that ICAI issues guidance notes on various matters. Now, what is guidance? What are guidance notes? Guidance notes are issued to assist the members, to assist the practicing members, relating to some things, some practical difficulties which might come. Say, say some new provision has come in the law, or new reporting has come in the law. So the ICAI issues guidance note for the assistance of members, clarifying many things. So as the name suggests, guidance, it means that it is meant to guide the members in discharge of their functions. Okay. So guidance notes can be issued in relating to both accounting matters as well as auditing matters, to both the things. Say there is a guidance note issued by ICAI on audit of banks. There is a guidance note issued by ICAI on audit under section 44AB of Income Tax Act. Similarly, there are guidance notes on host of matters, and there are guidance notes on accounting matters also. So you would say whether these guidance notes are compulsory to be followed. Guidance notes, these are recommendatory in nature. Recommendation है भैया, हम कहते हैं कि आप इसको फॉलो कीजिए, ठीक है, recommendatory. Okay, guidance notes are recommendatory in nature. Guidance notes are recommendatory in nature. Is that clear? The name suggests guidance notes, that these should ordinarily be followed by the members. These are authoritative and members are following these. But whenever these are not followed by members while conducting audit, they have to state material departures therefrom. कि भाई गाइडेंस नोट तो ये कह रहा था एंड यू हैव नॉट फॉलोड दिस गाइडेंस नोट, देन हिज रिपोर्ट शुड ड्रॉ material departure therefrom. Similarly, in case of accounting matter, say the institute has issued guidance note on some accounting matter, how this should be treated in the books of accounts of an entity, then if this has not been followed, then adequate disclosure has to be made. That guidance note of ICAI issue says this thing, but the entity has not followed it. So adequate disclosure has to be made. Is that clear? Okay, so guidance notes are clear. So what are the, whenever you do remember the things, guys, try to mark their distinctive points. Remember distinctive points. First, you have to learn the name. First, you would remember the name, guidance notes. Then you should remember in your mind that these may relate to accounting and auditing matters. Both. These can relate to accounting or auditing matters. And these are recommendatory in nature. Because the name is such, guidance note, these are meant to guide the members. These are recommendatory in nature. Okay. So when in case of an accounting matter, guidance note is not being followed, then adequate disclosure has to be made. And in case of auditing matter, then material departures have to be stated. That guidance note stated that this procedure had to be followed, or this thing to be done, but this approach has been taken. Okay, is that clear? And statements, there is another term, statement. So institute also issues, ICAI also issues statements on certain critical matters, and these are mandatory to be followed by members. So what is the difference between uh, what is the difference between statements and guidance notes? Statements are mandatory, whereas guidance notes are recommendatory. And statements are also issued in respect of accounting and auditing matters both. Okay, so I am again repeating it. What is the difference between statements versus guidance notes? So let us say statement versus guidance notes. These are mandatory. And what about guidance notes? These are recommendatory. These are issued for both accounting and auditing matters. These are also issued for both accounting and auditing matters. Okay. Okay, is that clear to you, students? So we have done the standard part, overall view of standards. So I think you have got a fair idea of standards. What is their nature? Why are these issued? You should be able to grasp these things and try to remember, guys, the crux words, the main words. Okay, because in auditing paper, unless you write, you remember the key words, you would not be able to frame the answer, because you would have understood by now that the subject contains lot of new words for you, lot of technical words for you. So all these words you have to remember, you have to understand their meaning, and you may frame the answer in your own way, but you cannot change the key words or key concepts. Okay. So is that clear? So guys, the now we come to qualities of an of auditor. So obviously, as you would understand that an auditor has to be honest, he has to be a person of integrity, and besides, he should be able to interact with people. He should be polite but firm also. He should have quality to dig out information from people. Okay. And he should be he should have quality of making judgments, quality of making judgments. Okay, so these all things come by experience. These all things come by experience. And he should not certify any information which is wrong, and whatever he certifies, he should do it with due caution, after exercising his professional skill and judgment. Okay, guys. Now we come to another topic, guys, that is ethics. That is very important. Ethics. Now we come to another topic, that is ethics within this chapter. So what do we mean by ethics? Students, what do we mean by ethics? What is meant by ethics? Ethics are principles of conduct governing an individual or group. Principles of conduct governing an individual and group. So how one should conduct itself in public? Say every profession has got its own ethics. Students, you know, medical profession, doctors have got their own ethics, lawyers have got their own ethics. Similarly, auditors, CAs have got their own ethics. In fact, ethics are very important for chartered accountants. Very important. Why? Why ethics are important for chartered accountants? Because an auditor, a chartered accountant, he is going to deal with financial information. He is going to deal with financial information. Okay. And financial information, he has to certify the figures, he has to issue his report, he has to give his opinion. So therefore, in case of auditing profession, in case of a chartered accountant, the ethics become very important. Say in case of doctors, when doctors practice, they take a oath that is known as Hippocratic oath. Have you heard of this oath? Hippocratic oath. That they will take care of patients and all that, all those type of things. They will not take undue advantage. So these kind of things fall under the category of ethics. Rules of good behavior. What should be the ideal behavior of the profession in public at large? That you would not deceive anybody, that you would not make undue advantage, make money at the expense of others. So these are the common threads which form the principle of ethics in all professions, and therefore auditing profession is no exception. Rather, in the profession of auditing, the importance of ethics is too much. The importance of ethics is too much. It is very much in the profession of auditing. Okay. So guys, you understand how ethics are important. There you can gauge the importance of ethics from the fact that ICAI has issued a complete code of ethics for chartered accountants, and you would be studying this in your syllabus, as part of your syllabus, when you will read auditing in your CA final exams. In CA final exams, the name of the paper is also advanced auditing and professional ethics. So you can understand how important ethics are for an auditor, for a chartered accountant. Okay. So importance, you understand what is the importance of ethics. Sneha is desperately seeking for a break. Sneha, wait for some more time. Say when you are enrolled for CA course, so you should be a tough nut to crack. Okay. So increase your learning capabilities and listening capabilities. I would request Sneha, don't mind. So there is a body, guys, ISBA. Remember the name correctly, ISBA. This is International Ethics Standards Board for accountants. Okay. So ISBA has stated that wherever an independent audit of financial statement applies, so while conducting independent audit of financial statements, there are five fundamental principles. There are five fundamental principles of professional ethics. So here in your syllabus at intermediate level, we shall be only discussing these five fundamental principles. Other things are not in your syllabus. Five fundamental principles of ethics as propounded by ISBA, International Ethics Standards Board for Accountants. So we will be discussing five fundamental principles of financial ethics. So ISBA कहती है कि ये पांच फंडामेंटल प्रिंसिपल्स प्रोफेशनल एथिक्स के हैं. These form bedrock of professional ethics. जो सारा प्रोफेशनल एथिक्स है, it is based upon these five fundamental principles. So five fundamental principles. Five fundamental principles of professional ethics given by ISBA. First, we will familiarize ourselves with broad names. What are the names of these five fundamental principles of professional ethics? Okay, one is integrity. Thereafter, we will discuss what do these mean. Second is objectivity. Third is professional competence and due care. Okay. Fourth is confidentiality. And fifth is professional behavior. So only thing that is in your syllabus, it is you have to understand meaning of all these five terms. Rest of the ethics, what are those ethics, and what are the provisions in Chartered Accountant Act 1949 regarding what happens when ethics are not followed, what is professional misconduct. These all things you would be studying at your CA final level. So we are only concerned here with understanding meaning of these five terms. Okay. So what is the meaning of these five terms? Integrity. What does integrity mean? Integrity means that an auditor, he shall be straightforward and honest in dealings with this client. Okay. He shall not be associated with any false reports, any misleading information, or he shall not be associated with any report which omits some material information, which does not give information, that information, so that report becomes misleading, so that it misleads user of that report. Okay. So that is what we mean by integrity. Now second point. What is meaning of objectivity? Objective means that auditor's judgment has to be made keeping in view objective factors in consideration. He has not to be influenced by any any bias or conflict of interest. He has not to be influenced uh, by another external factors. Whatever facts are there, he should keep in mind those factors objectively, and then he has to form his opinion. This is what all objectivity is all about. He has to be objective. Okay, so objectivity forms one of the fundamental principles of professional ethics, that what are figures before him, what are facts before him, what are circumstances before him, he would make his decision on the basis of those things. He would not be influenced by any bias, any conflict of interest, okay, or any influence of other person, any outside influence, any undue influence. Okay. Third thing, third thing is these five fundamental principles, students, are very important. Many times in the exams, MCQs have come. Which of the following is not five fundamental principles of ISBA? Sometimes you have been asked to explain these terms also. Okay. So third thing is professional competence and due care. It means that the auditor, he shall perform his work, he shall perform his assignment with professional competence, with all the knowledge and skill he has accumulated, he has in his hand. Okay, and with due care. What does due care mean, guys? He shall perform his work with due care. He shall exercise the caution. He shall do the work diligently. Now, what does diligence means? Diligence means doing the work carefully, taking all the aspects into consideration. Okay, he has not to rush into his work. He shall he shall conduct his work diligently, carefully, after examining all the aspects. So this means, this is the meaning of professional competence and due care. Okay. And fourth is confidentiality. Confidentiality, as a name suggests, that what it may so happen that when you are doing the audit of a company, you might come to know of some confidential information about the company, say about the who are the buyers, who are the suppliers, or financial information, what are the liabilities, what are the assets of the company. So all these financial information is very sensitive. You might come to know about the tax liabilities of the company and so many things. So these things, a confidentiality has to be maintained. Say when you are doing the audit of a bank, you come to know about the various clients, various borrowers. So you cannot use that information for your use, for your personal use, or for giving it to others. So confidentiality is very important. And fifth is professional behavior. Now it seems to be a general term, professional behavior. It means that auditor shall comply with all rules and regulations, and he will not do anything in public which would bring disrepute to the profession. Which would bring disrepute to the profession. Say, I will give you an example. Say if there is some dispute, an auditor goes to some department, to some government department, and there is some argument, and say whatever could be the reason, he turns violent or he abuses, these kind of things. So these are not worthy, these are not expected from a professional. Okay, so he is, because why? Because although it might be a personal issue, it brings to disrepute to the whole of profession. The image of profession goes down. So that is why professional behavior is expected of every chartered accountant, and these are the 5 fundamental principles of professional ethics given by ISBA, International Ethics Standards Board for Accountants. So we will again see what is written in our module. Yes. What does module say about? Yes. It says the ISBA code establishes following as fundamental principles of professional ethics relevant to the auditor when conducting audit of financial statements. Okay. So what are these fundamental principles? One is integrity. Integrity requires auditor to be straightforward and honest in his professional and business relationship. It means fair dealing. He shall deal fairly, truthfully, and he shall not be associated with any false reports or returns. Okay, which he believes contains a materially false or misleading statement, or which has been prepared recklessly. Recklessly means hurriedly, without giving due thought, जो primarily देखने से गलत लग रहा है, or omits required information, or the report omits some information which could be misleading. By omission, it can mislead some user. Okay. The objectivity, second is objectivity. Objectivity means, the principle of objectivity means that auditor shall not compromise because of conflict of interest, bias, or undue influence of others. Okay. And third is professional competence and due care. He shall do his work with professional knowledge and skill and diligence. He shall act diligently. Diligence includes responsibility to act carefully and on a timely basis. Diligent means he shall act carefully after considering all the aspects. जब हम कहते हैं ना किसी चीज का, whether you have done due diligence, whether you have considered all the things. Say when you joined CA course, whether you did due diligence, क्या आपने देखा, क्या आपने सारी चीजों को समझा? Why are you joining the course? Okay. So confidentiality. Another thing is confidentiality. Confidentiality principle requires an auditor to respect confidentiality of information acquired as a result of professional relationships. That is very simple. And professional behavior. He should avoid any conduct. He should comply with relevant laws. He should avoid any conduct that might discredit the profession. That is very important. That might discredit the profession. So all these 5 principles, you have to remember their names. Okay. And also understand meaning. And besides, you know that auditor has to be independent, and independence has to be maintained at any cost, because audit is an independent examination of financial information of an entity. Okay, guys. So any doubt up till now, drop your mails. We have done an overview of standard setting process and different kind of standards issued by AASB, and we have also gone through ISBA principles, 5 ISBA principles forming bedrock of fundamental principles of ethics while conducting audit of financial statements. Again, I am repeating those 5 principles you have to remember. Number 1 is integrity, second is objectivity, third is professional competence and due care. Fourth is confidentiality, and fifth is professional behavior. Okay, guys, hope you have understood, and I think you are understanding, and the things are not going above your head. I hope so sincerely. So let's take a break for 10 minutes. Okay, guys, see you after 10 minutes. ठीक. Yes. Welcome back, guys. So, guys, next concept is that we had touched upon day before yesterday. So, today we are going to discuss it in detail. It is independence. Independence of auditor. So, what does independence means, guys? Students, independence means that judgment of a person, that decision or judgment of a person is not dependent upon some external influence. It means that decision, judgment of the auditor is not subordinate to somebody else. He cannot be influenced by somebody else. Okay. So independence has two aspects. Now, one is independence of mind, and another is independence in appearance. Now, what are these two concepts and why these are important? Now, independence of mind. Independence of mind means, students, simply that the auditor has to develop an attitude which is of not being influenced by others. Okay, he has to, like, this cannot be brought about by laws or rules. Whatever rules you make, these can always be bent by some persons. So it is an attitude which has to be developed, that the auditor has to be independent. He has not to be externally influenced from any outside source. It is an attitude. Okay, so it is an attitude that he should exercise all the professional care and skill in performing his assignment, and he should do all his work objectively. Objectively, we have already understood that he should not be influenced by others. He should not be, his decision should not be subject to any bias or undue conflict of interest. Okay, and he should be a man of integrity. Now, this is a quality which has to be developed. So this is what we mean to say by independence of mind. Okay, regulatory requirements are there, CA Act is there, Code of Ethics is there, but the auditor has to develop an attitude of independence, that he would critically analyze the audit evidence objectively, keeping in view facts in the mind, without being influenced by extraneous factors. Okay, and second thing is independence in appearance. Now you would say, what is independence in appearance? So independence in appearance means that an auditor, he should not only be independent, but to the third parties, he should look to be independent also. It means that he should not do anything which give an impression to third parties, to other persons, to outsiders, that his objectivity has been compromised, that is, he is favoring the company, that he is not an independent person. So This is what we mean by independence in appearance. That to the third parties, his conduct should be such that it should not look to the third parties that his independence has been compromised, or he is taking sides for the company, because the audited financial accounts, audited financial statements, these are relied by a large number of stakeholders, by public at large, by shareholders, by bankers. So all these persons are reading financial statements from their perspectives. Okay, so the auditor should not do any such thing which leads to impression in minds of other persons, in minds of users of financial statements, that his independence is at stake, that he is unduly favoring the company, or he is having some interest in the company, or he is unduly justifying the cause of the company. Because if he does such things, then in the eyes of public, although he has conducted the audit independently, uh, he has followed all the audit procedures, but still he might be perceived as a non-independent person. So that is why independence of mind and independence in appearance are both very important, and these are two aspects, these are two facets of the concept of independence of the auditor. Okay, so is that clear to you guys? What do we mean by independence of mind and independence in appearance? Guys, this is also a very important concept. Very important concept. Many times questions have come from this concept also. So any doubts, you can drop your mails. Any doubts, you can drop your mails, guys. So you understand, guys, that in practical situations there may be many situations which pose different dilemmas for the auditor. He could be in difficult situations. So there could be many practical situations where independence of the auditor might be under threat. Okay. So Mukta is asking, sir, repeat independence in appearance once again. So Mukta, independence in appearance means that although say an auditor, a chartered accountant, he is acting independently, but publicly say he is making statements favoring the company, or suppose public comes to know, or stakeholders come to know that he has financial interest in the company, then to the stakeholders he would not look to be an independent person. So the concept of independence in appearance states that he should not do any such thing which show that his compromise, that his objectivity, his capacity to take decisions on the objective criteria has been diminished, it has been compromised. The stakeholders should not feel that he is not an independent person, that although he is auditor, but they somehow feel that his reports do not reflect true and fair view of the affairs of the company, that he might have favored the company due to some reasons, or due to his conduct in the public. So is that clear to you guys? So Hiral Parikh is saying, why is independence not defined clearly? Hiral, independence is a concept. So it has been explained, and it states that independence means that judgment of a person is not subordinate. It means that independence is not of a person is not dependent on the wishes or directions of another person who might have engaged him. Say the client has engaged the chartered accountant, but once engagement has been accepted and he has been given the assignment to audit the accounts, then he has to do all the things independently. Although the client has appointed him, he has not to act according to the wishes of his client. Okay, he would conduct his audit in accordance with standards on auditing by employing all his professional skill and knowledge. Okay, is that clear? Is that clear to you, Hiral? And independence in appearance, I have already explained twice. Mukta, is that clear? Please let me know so that we should move further. Is independence in appearance also clear? What does independence in appearance mean? Is that clear to you? So again, independence of the auditor has not only to exist, he has not only to act independently, but to other persons. He should look that he has acted independently. That is its importance. To other persons, it should look that he has acted independently, which means that he should not do any act which compromises his ability to take decisions on objective basis, on extraneous considerations, without being influenced from others. He should not do such things. Okay. Yes, Ayush, there are many disqualifications of the auditor of a company so that auditor his independence remains. So a person who holds shares of a company, he cannot become auditor of that company. He is disqualified. So these all things have been done to maintain independence of the company. A person who holds securities of a company is disqualified from being appointed as auditor of the company. So you understand how important these things are and how these are linked. So now you go to your company law classes. I don't know whether you have studied the provisions regarding appointment and qualification and disqualification of auditors. If you remember those provisions, you would be immediately linking up those things with concept of independence of auditors. Okay, so there might be situations, guys, when there are threats to independence of the auditor. So these threats to independence have been broadly categorized into 5 categories. So we shall be studying all these 5 categories. Threat means that something has been done which puts a danger mark on the independence of auditor. That if such a thing is there, then independence of auditor is in danger. Okay, independence of auditor is under compromise. It can be compromised. So these are 5 kinds of threats that we shall study right now. So threats to independence of auditor. Threats to independence of auditor. Okay, so what are these threats? These are, first we shall study their names, and try to remember their names, and then we shall study what is the meaning of these threats broadly. So guys, this is also very important, and many times 2 mark question, MCQ, case study based question are coming on threats to independence of auditor many times. Now Mukta is again asking, sir, in the study material it is written that independence of auditor has not only to exist but also appear to so exist. Definitely, Mukta, again I have explained to you that not only he has to act independently, but to other persons it should appear to other persons that he has acted independently. Say if I am doing something, if I am openly favoring that company and I am giving statements, I am championing the cause of that company, so the message would go to the public at large that this person is definitely with the company and he is favoring the company. How they can rely upon the audited accounts of that company? How they can rely upon the audit report of that accountant, of that auditor? So it would create a doubt in the minds of users of financial statements. That is why appearance of that an auditor should act independently, but he should also appear to be independent. That has been made. That is the meaning of all this concept. Hope, Mukta, you have understood. Pooja is stating that if assurance is given by auditor, does it mean that we are favoring? No, Pooja. Assurance, the auditor is giving assurance. That is the final outcome of the audit process. Say when audit process has been completed, the auditor has to express his opinion. If he has found nothing wrong, obviously he would state that he would give an unqualified opinion that uh, that the accounts of the company reflect true and fair view. Okay, so it is not a kind of favor. It is part of the duty of the auditor. So we will study 5 kinds of threat. So there are first kind of threat is self-interest threats. First we will discuss their names. Second is self-review threats. Third is advocacy threats. Fourth is familiarity threats. And fifth is intimidation threats. First, you have to remember all their names, guys, and then understand their meanings, their significance. What is the what do these mean? Self-interest threats. Now, first we will do self-interest threats. Self-interest threats. Say, I will give you an example. Say, if a person holds shares of a company, he has invested huge amount in shares of a company. Okay, so can he give an independent audit report? If he can he give, because he would not report anything adverse because of his financial interest. because of his financial interest. He has got financial interest in the company. So these kind of threats are known as self-interest threats. These kind of threats are known as self-interest threats, where interest of the person who is auditor, that interest is creating a threat. Say similarly, like Ayush has recently asked a question. So say if a person is holding securities of a company, that is a self-interest threat. He would not be in a position to give an independent opinion because of his own financial interest involved. Because of his own financial interest involvement. Okay, is that clear? That is why, guys, section 141 subsection 3 of Companies Act 2013, you would study in your chapter on companies audit. It debars a person who holds securities of a company from being appointed as an auditor of the company. What is the reason? Due to self-interest threat, because it compromises independence of auditor. Okay, so is that clear to you? Self-interest threat. So another example of self-interest threat would be, say, if say an auditor is too much dependent upon fees received from single client. Fees received from a single client. Say one single client forms substantial amount of fees, professional fees received by the auditor. Then would he be in a position to issue an independent report? No, because he would always fear that if I report something adverse, then my client will go away. He will lose the client. Okay. Yes, Pooja, if a person holds securities of a company, then he is disqualified from being appointed as auditor of the company. He is debarred. The auditor has first to check whether he is disqualified or not. This disqualification is expressly provided under section 141 of the Companies Act. Section 141 subsection 3. Okay. So you understand, guys, self-interest threats. So now second type of threat was self-review threats. Self-review threats. Now what are self-review threats? Say the auditor of the company in the past has rendered some consultancy services or management services to the company. Now he is acting as auditor of the company, and the services he had rendered, that might also come under review, might also come under verification or checking. Then he would not like that his work would be reviewed. Okay, so these kind of threats are known as self-review threats. These kind of threats are known as self-review threats. Now we come to third. Third type of threat is known as advocacy threats. Advocacy threats. Now, what are advocacy threats? Advocacy threats means, like I told you, that some auditor is, say, case is going, some litigation is going against the company. Here is a company and some legal case is going against the company. Litigation is going against the company and the auditor is openly taking sides of the company. The auditor is openly taking sides of the company. He is, so in the public, he would be perceived to be taking sides of the company. So his independence would appear to be compromised. He would perceive to be championing the cause of the company, backing the company without going into the merits. He would be thought as a poster boy of the company. Okay. So these kind of threats are known as advocacy threats. When the when the auditor himself becomes an advocate of the company, he supports the company. So these kind of threats are called as advocacy threats. Yes, Davesh, Jagnesh, you are saying CA doing job is disqualified. Yes, a CA who is an employee of the company, he cannot issue an audit report. He cannot express opinion on the financial statements of the company. This also you have to understand, this is also expressly disqualified under Companies Act 2013, that an officer or employee of the company cannot become an auditor of the company. It is also there in section 141 subsection 3. When again I am telling you, when you will come to chapter 10 on company audit, all these things you would study. Then you can link all these things with chapter 1 and everything would become clear. The mist will become clear and you would be in a position to understand the concepts in a better way. This is the beauty of analytical thinking. So this is the beauty of analytical thinking, and this is how we should study. This is how you should study, by linking everything with other concepts. Okay. Now third is advocacy threats. We have done. Now fourth is familiarity threats. Now, what are familiarity threats? Familiarity threat means, guys, say if an auditor becomes too much familiar with the company, say if a person is auditor of the company for a certain number of years, then he knows everybody. He knows managing director, he knows CEO, he knows all the accounting stuff. Okay, so a sort of freshness in the whole auditing job, that is lost. Okay, so that is why keeping in view this thing, Companies Act section 139 subsection 2, it allows for rotation of auditors, that you would also read in detail in chapter 10 on company audit, that auditors of certain class of companies have to be rotated every 5 years. कि 5 साल बाद सेम ऑडिटर नहीं रहेगा. there is a, for certain class of companies, there is a provision in the law, in the Companies Act 2013. Why it has been incorporated? Why it has been done so? To reduce, to overcome familiarity threats. To overcome familiarity threats. That the auditor does not become too familiar with the company. That an auditor does not become too familiar with the company. Yes, Aradhana, that is simple. When you become a CA, you can only sign the audited accounts, you can issue a report only if you are a practicing chartered accountant. A person who does not hold certificate of practice, who is not practicing, he is not authorized to sign any, he is not authorized to perform any attest function. He cannot sign balance sheet, financial statements and issue report or express opinion. Okay, is that clear? Now Ayush is asking, sir, advocacy threat is not clear. Ayush, advocacy threat, you have to understand, advocacy, you do not mean literal meaning of advocacy, literal meaning, literal, समझते हो जो आयुष, बिल्कुल शाब्दिक अर्थ मत लीजिए एडवोकेसी का. एडवोकेसी, एडवोकेट मीन्स वन हु इज सपोर्टिंग, one who is openly supporting that company. Say, I had given you an example, say some litigation case is going against the company. Okay. And that it is not that the CA is acting as an advocate of the company, but say he is giving such statements or he is making such noises that to the public at large, it appears that he is openly championing the cause of the company. He is openly backing the company on certain matter. He is not going into merits. He is not discussing the issue on merits, and he is not working objectively. So these kind of threats are known as advocacy threats. Okay. Advocacy threats means when the person is advocating the cause of some other. It does not mean that he is acting as an advocate on behalf of other. Advocate means to support somebody. What is the literal meaning? To support somebody, to champion the cause of somebody. So if somebody is supporting the cause of somebody without acting objectively, so it is known as advocacy threat. Okay. Is that clear to you, Ayush? Now we come to number 5, intimidation threats. Okay. Now what are intimidation threats? What is the meaning of intimidation? What is the meaning of term intimidation? It means to say in Hindi, to put fear, darana, dhamkana. So intimidation threats, say when client says that he would not appoint you as an auditor next year unless you give favorable report. Okay. So this is a kind of intimidation threats. Pressure tactics. Pressure tactics. Okay. So these type of threats put pressure on the auditor to not to not to act objectively, not to act independently. So these kind of threats are known as intimidation threats. Okay. These kinds of threats are known as intimidation threats. हम आपको काम नहीं देंगे, उस ग्रुप कंपनी का काम चला जाएगा अगर आप ठीक तरह से रिपोर्ट नहीं दोगे. सो द ऑडिटर हैज टू handle all this pressure and he has to ward off intimidation threats. Okay, so some Menon Rafiq Bhai, Miss Menon Rafiq Bhai is saying, sir, self-review threats. She wants to again understand self-review threats. Self-review threats, you can understand, student, that you understand it from the name of the threat, self-review, where work of auditor itself is under review. Okay, say the auditor previously he had given some management services, some consultancy services to the company. Okay, and there was some problem, there was some hanky-panky in these services. Okay, and now he is appointed as auditor of the company. So how he can state something adverse against something which he has already rendered? So when his work is under review, then these kind of threats is called as self-review threats. मेरा खुद का काम रिव्यू होना है और उसमें कोई गलती है तो मैं अपने अगेंस्ट रिपोर्ट कैसे दूंगा? Okay, so these are examples of self-review threats. Is that clear? So guys, you have to read few times, 3-4 times all these concepts. First you have to remember the names, and then you have to understand the threats, and then make a distinction in your mind regarding what is the difference between one threat and another threat. Okay, say say relative of some partner of the audit firm is employee in the company. So this is also a kind of familiarity threat, because the relative of the auditor, he is acting as employee of the company, he is in employment of the company, so the auditor knows him because he is relative. So these kind of threats are known as familiarity threats. That is why Companies Act 2013 has put a bar on such appointments. Okay guys, so again we shall repeat, there are 5 kind of threats. Okay, self-interest threat, where the auditor self-interest is involved. Self-review threats, where auditor's work which he has done in some another capacity in the company, that is under that can be reviewed. So this is a self-review threat. My work is going to be reviewed, then this is a self-review threat. Okay, and third is advocacy threat, when the auditor is openly championing the cause of the company. Advocate, he becomes supporter of the company, you can say. He becomes supporter or advocate of the company. Advocate, you have not to understand in legal term. Advocate means he becomes supporter open supporter of the company, and public perceives him to be always acting on behalf of the company. Okay, giving favorable opinion on the company. Next is familiarity threats. Familiarity threats, I have already told you, when the auditor becomes too familiar with the company, he is doing audit for number of years, he becomes too familiar, he knows everybody. Okay, so he is not, all perspective of freshness is lost. That is why Companies Act has mandated that auditors be reported after a certain number of years. Rotation of auditors. That is why there is a concept of rotation of auditors. Rotation of auditor. This is contained in section 139 subsection 2 of Companies Act. You would study your chapter 10. Okay. Familiarity threats and intimidation threats. Intimidation threats, you have already just now studied. To put fear, to intimidate somebody that your work will be reduced if you do not give report favorably. Okay, so these are 5 kind of threats, broad groupings. So these are broad groupings of 5 kind of threats. Now what should happen? What should happen if the auditor sees some threat? Now, if the auditor perceives a threat, then first he should try to remove that threat. Okay? If he does not remove, if he is not able to remove that threat, then he should withdraw. He should withdraw from that assignment. He should withdraw from engagement. If it is not possible to remove that threat, then he should withdraw from engagement. Okay, so this is known as mitigation of threats. Mitigation of threats. कि threats को कम कैसे किया जाना है. Mitigation of threats. Say I'll give you an example. Say in Companies Act there is a provision that even relative of an auditor cannot hold securities in that company up to a certain amount. If relative of the auditor also holds securities of that company beyond a certain amount, then the auditor becomes disqualified. It is a threat to his independence. So what he should do? He should ask the relative to sell those securities, to offload those securities if he has to continue as auditor of the company. So in this way, he has removed that threat. If he is not able to remove that threat, then he has to withdraw from the engagement. Okay, clear guys? Is that clear? All 5 kind of threats. So students, there is one more concept that we shall try to do today. That is very important. That is also very important, and many times question have been asked. Now that concept is professional skepticism. Professional skepticism. Now guys, what is professional skepticism? Professional skepticism means that auditor has always to be a person of questioning mind. He should always question, and he should be alert to the probability of misstatements. Okay, and he should make critical assessment of audit evidence. What does all this mean, guys? It means yes, it means that the auditor has always be alive that there can be misstatements in the financial statements. He has always to be alive to the fact that there can be errors and frauds. He should not look at accept all at their face value. If some conflicting evidence emerges from whatever evidence he has collected earlier, then he should change his opinion. He should perform additional procedures. Why it is so? Because all these things might suggest some misstatements due to fraud. Okay, suppose during the process of audit, the auditor has obtained some audit evidence. Later on, while performing some other procedure, he again obtains some audit evidence which is contradictory to the evidence earlier obtained. Then he should become alert. He should question. He has always to be alive. He should always be alert to the possibility of misstatements due to frauds and errors. Okay, and whatever evidence he has collected during the process of audit, he has to analyze it. He has to assess it critically whether this evidence can be relied upon, whether he should rely upon it or not, keeping in view situation, keeping in view circumstances. So this concept is known as professional skepticism. Okay, this is known as professional skepticism. It means that that auditor has always to remain alive to the possibilities of misstatements. There may be situations which might indicate the possibilities of fraud. So in such a case, the auditor has always to adopt an attitude of professional skepticism throughout the audit, not only from planning stage, but during the conduct of audit, at the time of analyzing evidence, at the time of giving report, he has to maintain an attitude of doubt, an attitude of questioning mind. He has to be skeptic. He cannot take all the things at face value. Although he relies upon the information given by the management, but given the circumstances of his assignment, given the circumstances of situation, he has to critically analyze that evidence. He has to become a skeptic. Okay, skepticism means rather an attitude of doubtfulness, of questioning mind. Okay, is that clear to you guys? What is the concept of professional skepticism? I will give you an example. You are seeing this motto of ICAI. What is this? This is an eagle. This is an eagle, the Garuda. So there is some, within this motto, there is some shloka written in it. Sanskrit shloka, the literal meaning of which in English is a person who is awake among those that sleep. So that summarizes the whole concept of professional skepticism, कि जो आदमी जागा हुआ है किनमें, बाकी लोग सोए हुए में जो जागा हुआ है. So that is motto of ICI, a person who is awake among those that sleep. So this summarizes the concept, the importance of professional skepticism, that the auditor has not to generalize the things. He has not to overlook the unusual circumstances. Okay, because if he does not have an attitude of professional skepticism, then he would end up in making too much generalization. He has not questioned the employees, he has not questioned the management, he has not sought for relevant information, he has not documented the records. So in this way he has skipped the concept of professional skepticism. Then he might end up in giving an inappropriate opinion. So that is why the concept of professional skepticism is very important, and it forms the basic fundamental of the whole exercise of auditing. So guys, you understand the concept of professional skepticism? Please let me know. You understand the concept of professional skepticism? What the concept of professional skepticism is all about? It is about an attitude of questioning mind, being alive, being alert to the possibilities of material misstatements, okay, and always analyzing, always critically making assessment of audit evidence, always analyzing audit evidence critically with a pinch of salt. Okay, ऐसा भी हो सकता है. Okay, because why? We had to be awake in the person among those who are sleeping. Okay, so we have to be alive to the possibility that there can be misstatements. So this is what is motto of ICI is all about, a person who is awake among those that sleep. So this also relates to summarizes the concept of professional skepticism. Okay guys, so now we will take few correct and incorrect questions. So I am sharing the slide with you. Hope you do not mind extra 10 minutes guys. Yes. Question number 1. Correct, incorrect. Guys, quickly. Audit is a reasonable assurance engagement, whereas review is a limited assurance engagement. Correct or incorrect? Tell me. Tell me fast, guys. Audit is a reasonable assurance engagement, whereas review is a limited assurance engagement. Yes, Himanshu, Siddharth, Deepika have answered quickly. Lightning fast mails. We have already discussed while studying standard setting process that audit is a reasonable assurance engagement and review is a limited assurance engagement. It is a tad lower than the review, is a tad lower than the audit. Okay, so this is correct. Now second, SQC1 applies to standards on auditing only. What is SQC1? What is SQC1? SQC1 is standard on quality control. We have discussed standard on quality control. So the statement says whether the standard on quality control applies to SQC1, whether it applies to essays only or it applies to other standards also. Tell me, guys. SQC1 applies to standards on auditing only. Is the statement correct or incorrect? Only Siddharth. Siddharth has given the answer, but Siddharth, your answer is without reason. What is the reason? Yes, now many mails have come. This is false, incorrect. SQC1 applies to all engagement standards. It applies to essays also, it applies to standard on review engagement, it applies to standards on assurance engagement, and it also applies to standards on related services. So SQC1 is not only applicable to standards on auditing, but it applies to all 4 engagement standards. Ayush Agarwal has written it correctly. Now, number 3. Statement number 3. The principle of integrity. Now, what the question is asking? Integrity. The principle of integrity requires auditor not to compromise professional judgment due to bias or conflict of interest. Now, is this correct? Integrity का क्या मतलब है? बताएं. What is the meaning of integrity? यही पूछ रहा है क्वेश्चन. स्टेटमेंट यही पूछ रही है. Yes, Abhishek, you have also answered. Okay, I might not be able to take all the names due to shortage of time. Yes, Abhishek, I am getting your mails. The principle of integrity requires an auditor not to compromise professional judgment due to bias or conflict of interest. क्या इंटीग्रिटी ऑफ प्रिंसिपल ऑफ इंटीग्रिटी का ये मतलब है या कुछ और है? स्टेटमेंट ये पूछ रही है आपसे. Yes. Now many have answered correctly. This not to compromise professional judgment due to bias or conflict of interest, it relates to objectivity. It does not relate to integrity. Integrity means straightforward, honest dealing, not to be associated with false reports, not to omit any information. Whereas integrity means not to be influenced by others or due to conflict of interest or due to some bias. Okay, so this statement is incorrect. Now, question number 4, guys. One more thing: all these assignments which I am giving to you, these are uploaded. These are uploaded on your portal, on BOS VCC portal. These would be shown to you in your ID. These are there in your portal. You can also see there. Now number 4 is, question number 4 is, professional skepticism is necessary during planning and performance of audit. However, it is redundant for assessment of audit evidence. Now redundant का मीनिंग होता है हिंदी में जिसका कोई यूज नहीं है. You can say it is excess, superfluous. However, it is redundant. मतलब प्रोफेशनल स्केप्टिसिज्म प्लानिंग और परफॉर्मेंस में चाहिए, लेकिन ऑडिट एविडेंस में इसकी जरूरत नहीं है. क्या ये स्टेटमेंट सही है, वेदर इट इज करेक्ट और इनकरेक्ट? Professional skepticism is necessary during planning and performance of audit. However, it is redundant for assessment of audit evidence. Yes, guys, I think you have understood the concepts very well. Very well. All of you are answering correctly. Your questions are easy, or you have understood very well. Sharp minds. Yes, this is incorrect, because the auditor has to assess the audit evidence critically. So professional skepticism has to be maintained there also. Professional skepticism, you have to understand, is not required at the planning, performance stages, but also at the assessment of audit evidence. So you have to understand that a professional skepticism has to be maintained throughout the audit, at the time of planning, obtaining of audit evidence, assessment, performance, everything. Okay. Clear, guys? Clear? Yes. Now number 5. Dependence on a single client for substantial fees in overall audit fees of an auditor is example of familiarity threat. Tell me whether it is familiarity threat or somebody else. अगर किसी क्लाइंट की बहुत ज्यादा फीस एक ही क्लाइंट से आ रही है और वो उसी पे डिपेंडेंट है, वेदर इट इज ए फैमिलियरिटी थ्रेट और सम अदर थ्रेट. क्वेश्चन नंबर 5. Question number 5. Whether it is familiarity threat or other threat. Tell me. Yes, guys. Question number 5. Only 1 mail has come. Meghna Sharma. She has answered correctly. It is an example of self-interest threat. Not an example of familiarity threat. It is an example of self-interest threat. क्या थ्रेट है कि उसकी एक क्लाइंट की ज्यादा फीस से 80% फीस एक ही क्लाइंट से आ रही है, तो क्या है उसमें, ही वुड ऑलवेज बी इन फियर ऑफ लूजिंग दैट क्लाइंट, मेरा क्लाइंट चला जाएगा. तो कैसी थ्रेट हुई? इट इज ए सेल्फ इंटरेस्ट थ्रेट. हिज ऑन इंटरेस्ट इज गेटिंग कॉम्प्रोमाइज्ड. इट इज नॉट ए फैमिलियरिटी थ्रेट. फैमिलियरिटी थ्रेट तो familiarity threats happen when the auditor becomes too much familiar with that client. Okay. So guys, today we have discussed the standard setting process, what are the different type of standards, an overview of standards. We have discussed ISBA code and fundamental principles forming professional ethics. We have also discussed concept of independence, threats to independence of an auditor, their mitigation, and also very important concept of professional skepticism. Guys, I have tried to explain you the concepts with practical examples and trying to link up the things so that you can familiarize yourself with it. I think you have found it useful. Okay, guys, so it is over for today. Okay, good night. Good night to all of you. Okay, guys. Yes.